Good afternoon, everyone. BC Richfield here, coming to you live, but not from London today, from Suffolk, where we're taking a short break, vacation, if you like, towards the end of Congress. So really happy to be with you all today. The setup's a little bit different because we're traveling, so you might have to bear with me. And please do let me know if there are any technical issues with the sound or with the video. And please do also remind me, because I'll be flicking between screens for your comments. So if you've got any questions, please do pop them in there and I will get round to them. So without further ado, let's pop on to here and let's take a look at the chart. Hey, thank you, buddy. All good, bro. Legend. All right, guys. Well, look, I wanted to do a quick market review for you. I know that we have tons of stuff going on with Congress, which has been awesome, but we really want to get our heads back into the charts. The one thing that I do want to start by saying is we need to be aware that we've got potentially key news events coming up today. So let's kind of keep that in mind when we're looking at trade setups. But I wanted to kind of get on this one with you and take a look at something that's really been kind of big interest for me. Angry Patrick. Hey, brother. So yeah, let me just get rid of my avatar so we can get some full screen action on the go, and let's crack on. So what I've got here, let me go onto the daily for you and we can take a look at this. So very, very simply, for those of you that know, or those of you that don't, I utilize, or my view of the market is based around liquidity, right? So when we sweep liquidity on one side of a range or one side of a move, I'm then expecting price to travel to the other side of that given range. I'll talk about how we make those ranges up via a midline, an EQ, okay? So let me just clean this up for a second. Now, what we can see here is we have this candle, right? So this candle here, when this following candle closes within this candle's range, that means that the wicks on either side can't go beyond the wicks of this candle. Then when that candle closes like this one does, we get an inside bar pattern. This becomes our mother bar, this becomes our inside bar. And now what we're looking for here is, like any range play, as we can see in here, we're looking for price to travel down, interact with one of our highs or our lows. When that is swept, we then expect price to travel to the far side of that range, again, via the EQ, via the midline, right? That normally gives us some pretty reliable setups. Now, we can see here on the 21st, we ran the lows of the inside bar. We came back within the range. We came back up. And now let me just take a range fib here for you guys. And we can see the EQ, right? So what happened? Price came down, got the reaction here, came back within the range. That's our trigger to say, okay, let's start looking for potential long setups, targeting the midline, and then ultimately targeting the highs, okay? We can see we came up into this area here. Let me zoom in a bit for you. Price came up into this area, came above the EQ, tried to push on a bit more, but, excuse me, we ran these highs. And then as price pushed up, we ran these equal highs up here, or relative equal highs, all right, which stand out a lot more when we look at them on the lower time frames. When we ran them, price got a corrective move, right? Not a problem. Where did we come back into? We came back into this daily order block. Make that a different color so it stands out a bit more. Price came back out into here, found the orders, found liquidity, took these lows, and now we're moving higher, all right? So my feeling is that even though we've taken out this high here, and we could, when we look at this, label these up as relative equal highs. All right, I just call them equal highs, but absolutely right, relative equal highs. If you want to know more about that side of things, then it's an ICT concept. ICT and SZ made up a lot of my studying, a lot of my mentoring in my early days before I went on to study, obviously, a lot of other methodology and people as well. For me, I think it's important to have a broad understanding of the market, but a very narrow and deep understanding of your strategy and your trigger mechanisms, all right? So we can see we've run this liquidity, right? Now, the question for me is I really want to see this run of the highs in the mother bar, right? So that would look something like price pushing up into here. This isn't going to look great on a this isn't going to look great, unfortunately, on a daily, because you can't really get the arrows to work properly. But, without looking that ugly, something like that, running above, taking liquidity, closing back in the range, getting a retest of this area, and then we'd be looking for short setups on the breakdown. Now, it doesn't have to break down from there, right? Okay, it could continue to push up. If it is going to continue to push up, I'd like to see something like this, right? And then I'd be getting interested around here. All right, I'd want to see this held. I'd want to see a bit of consolidation, an impulsive breakout higher, to show that there's buyers willing to step in. Price often corrects either into a fair value gap around here or back to this kind of breaker line, in which case we then look for long setups on the lower time frame. So, like I said, guys, please do bear with me. I am just on one screen at the moment because I'm just taking a short break with some family. So I'm just going to take a quick look at your questions so I don't kind of fall away from that. Falcon, hey, buddy. BC, we seeing 18K soon? Yeah, quite possibly. I mean, what I would be wary of at the moment, they're very, very tricky conditions to trade. All right, low time frames. We've been having some good success, but even there, we're hitting around at the moment around about 60-65% win rate. We print all of our trades, right? So you can see all the information. We're very, very transparent with what we do. Now, some of those trades are getting 16, 17, 18% win rates, right? So it's a very, very profitable system as it has been all year. However, there's ups and downs, right? And at the moment, it is very, very tricky. I'd like to see price pump a little bit higher, but I'm really super aware of these highs. I think when we run into that kind of liquidity, I think there's naturally going to be quite a lot of sell orders waiting there. And we just need to see. I think the setup that's on the screen at the moment is a good indication if we're looking to kind of push a little bit higher. But really good question. 18K, just above the kind of highs there. So I can see where you're getting that from. We're definitely going to take a look at that on the lower time frames as well. So Menno, RS, hey BCD, hey buddy, straight back at you. Poeta, my good man, how are you doing? So, morning BC, you mentioned that you come from ICT school. 2 questions. Did you sign up for his program mentorship or watch the videos on YouTube too? Who else had influenced your trading skills? Good question, buddy. So there, ICT has a private paid membership group. I don't think that's open anymore. I could be wrong. Definitely recommend contacting him. It is really, really fantastic training. But in truth, you can find all of his stuff online now. If I was studying this again, and I'm someone, and the purists will hate me for this and the non-purists will, and blah 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 blah, but I respect the guy absolutely hugely. For me, he's one of the kings of price action concepts, but he's not the only one, people. I really do think you need to keep your horizons broad. You need to study and trade a lot of different systems. I really highly recommend the CMT, Chartered Market Technicians, of which Burb is a level 3, obviously, which is incredibly impressive, one of only a couple of thousand in the world, I believe. For me, I want to have a really broad market knowledge, because then I want to have a very deep understanding of my strategy, my triggers, but I want a broad market knowledge. I'll use moving averages. I've used a lot of other techniques and that over the years, and I've run profitable systems for many years now, and I know a lot of other traders that have as well. So I don't think it's kind of be all and end all of everything, but I do think, for me personally, he's at the core of pretty much everything that I do. So not trying to rip the guy off. I'm always happy to tell people that they're his methodology and his techniques that I study, but he's learned from other people as well. Larry Williams, I believe, a few others. So do get yourself a deep understanding of it. But to answer your question a little bit better than my waffly response, I would recommend taking his core content course and also the 2022 mentorship. I think they're absolutely fantastic. There's a lot of other things. Probably what I'd go back and tell myself if I was starting trading now series. Really, really good insights into how he'd kind of approach the market. So really get involved in that stuff. But again, do keep your horizons broad as well, and always try and keep yourself involved with people, communities that are, going to help push you along, right? Because there's a lot of information to interpret. And sometimes it is, I did all of this stuff on my own, right? And it took me years and years and years to get anywhere close to, not mastery sounds like such a wanky term, but to get into a point that I was comfortable enough to trade it and have profitable systems built around it, right? I could have saved myself 50, 60, 70% of that time had I been part of a community that would kind of help you along, all right? So make sure you do that. And Trader SZ is a huge influence on me. And in truth, my team members, it's not, you can say whatever you want about it. None of us are part of the nest because we rely on it. It's It's actually a lot of time out of our schedules that we give up, especially Burb, everyone else. And the money gets reinvested into the nest, right? It's so that you can help people secure financial freedom. And if you get the opportunity to go on there, please do take a look at the testimonials from people, because the reason we do it is because all of us have had help in the past from other people that have given up their time, and not just for free. I paid unbelievable amounts of my trading education, tens and tens of thousands, right? But I did it because I knew I wanted to pursue it as a career. Yes, there's really good free information out there as well, but there's also a load of really good paid groups, and there's some rubbish paid groups. Don't tar everything with the same brush. Do what you need to do to really double down, but really invest in yourself. Find something that speaks to you, and really, really just go deep on it. All right, buddy? So I hope that understands. But Trader SZ as well, all of his stuff is out there. His Telegram, bits and pieces like that. Keep in tune with the nest. Adrian, Crypto Burb, is one of the best market technicians that I've ever come across. His understanding and knowledge of the market teaches me new stuff every day, as do my team members. So do stay tuned in with that. But yeah, absolutely, his core content 2022, or the 2022 membership, is mentorship. Sorry, can't even speak today. Is very, very good. Menos again, yeah, good question. Yeah, perfect. So on what time frame, BC? So talking about the breakdown on this, we're going to look at this in a little bit more detail. I like to see structure breaks. I take typically hourly or 15-minute levels to find the key structure breaks rather than the micros, to try and get a bit more of an understanding. But I'll show you the exact setups that I'm monitoring here on the low time frames as well. During SEC, what we expect to dump or pump? Yeah, really good question. Not sure. Never really sure, to be honest. I mean, even on the last one, we saw good news really for risk assets, and it didn't really do too much to crypto. We'll have a little bit more of an effect on traditional markets, especially obviously equities and Forex, because it will be based around the strength of the dollar. So sorry, Jody. Yeah, exactly. E.g., validation before entering. Absolutely. So let's take a look at that. I'm going to flip back to my other screen at the moment. So this is what I'd be looking for if we were looking for breakout long plays. Yeah. But I'm just going to get rid of this at the moment just to clean things up. Now, while we're looking at this on the daily, we've got our key levels, right? So basically what we're looking for here is we're looking for weekly, daily highs and lows, session highs and lows, which I'll show you when we break this down onto a lower time frame like this. So the reason that I've got this all marked out, and we can just see there's just a little bit more detail here, but just to kind of run you through the thought process of this, right? We get the inside bar pattern confirmed round about here, right? I'm going to pop on my session breaks for anybody that doesn't know how to do that. We've got a little sun emblem in the bottom right-hand corner over here. You want to click on that, pop your session breaks on, you get these awesome lines. And you can click on them and make them more pronounced if you want to. I like keeping them a little bit kind of more in the background so they don't get too distracting. But these are just daily breaks, right? So this shows you when you're coming in day by day as you go through. Now, this is what I mean by session highs and session lows, right? Or daily highs, daily lows, and session highs, session lows are based around Asia, London, New York, and close, which are the different markets, all right, which we'll cover shortly. But in terms of how we're looking at liquidity here, what we're looking for is we're looking for key highs and lows to get run, and then we want to know the reaction there. The most obvious standout one here is this, right? This key low here, which makes up our mother bar low. When we purged out down into here, right, and then we've had this reaction, we've come back within the range, and this is where we're saying, okay, if prices come back within the range, it's not ready to break down yet. Yeah, so what we can do is look for our trade setups in here, where to the first to the EQ, and then to the highs. Now, the grey box that I've got here is our fair value gap. All right. And the fair value gap here represents an inefficiency in the market. See these big moves? Yeah? See these impulsive moves? And you see this candle's wick here and this candle's wick here don't cross over one another. All right? Same that happened here and here, right? And when we get these, we can use them aligned with our bias to look for areas that price can draw into, acts like a magnet for price, yeah? Price draws into that, then we can look for our setups in here to go long if and only if it's in line with our high time frame bias. So our high time frame bias through this has been bullish, all right? So this is the other thing I want to show you before I go into why I'm looking at this, and again, back to the fair value gap, is this is one that's really on my mind down here. This is what we used to take our longs, yeah, our long setups. So back in back a few days ago, we were looking at this. We were looking at this sell-off. We took the liquidity from these lows. We came back down below and ran this low here. We came into this fair value gap. Yeah. So then when we come into there, we're saying to ourselves, okay, well, what's our bias? Use the high time frame, guys. Please, please, please don't forget to use the higher time frame. Don't get too caught up on the lower time frames because you can just get chopped up. All right. Now, here, what we're saying to ourselves, let's remember, we're saying if we run these lows, then our expectation is for price to run these highs because it's searching for liquidity. All right. Smart money, institutional money that's bought in here. And again, we can see the other thing that it did there is it ran the lows down here. So it's gobbled up loads of liquidity, reversed the market. Now, the people that bought here want to sell up here. Yeah? Think about it. Really simple and sounds silly, right? But buy low and sell high. Yeah? That's the game. Buy down here and sell up here, right? Buy at a discount, sell at a premium. Okay. So I'm expecting price to push up here. Now, I'm not going to be naive enough to not make considerations for things like these equal highs here or here. So when we're running those, what I'm saying to myself is, okay, I'm going to wait for price to come into an area that I expect some kind of reaction. And if I get the expected reaction in terms of the breakout on my trigger, then I'm going to trade it, okay? If price continues to break down, I'm not just going to leave a limit order there and just trade it blindly. So let's remember this and let's label this up quickly. Okay, so now we're going to go on to a 15-minute chart. And we're going to look at this in a moment. But first of all, to really showcase the setup that I'm going to be looking for in here, I want to show you the same setup that we were looking for in here. Okay, so price comes down and tags into our fair value gap, right? What we're then looking for is a shift or a break in market structure, right? So we get this clean high here that gets taken out. What else do we want to see? We want to see a liquidity sweep from the lows, right? That's telling us that price is ready to make a move or that it's grab liquidity. This impulse move higher, yeah, that tells me that buyers are willing to step in here. So it doesn't mean I just blindly come into an entry here. Not really. That's certainly not how I trade. Okay. What I want to see is that I want to then see what price does from here. I would then drill into the lower time frames, but I'm very, very conscious that a lot of people can't trade those just purely because of a time perspective. So you can still look at these on the 15-minute chart and the principles remain the same. Okay. So what happens here? We get this impulse move higher, price breaks out above. On a 5-minute or lower chart, you would see much more of an impulsive move here, yeah, because we want to see price breaking above. Now, using the same principles, where do we want to get interested? Well, if this market structure break is telling us price is going higher, we've got a key target in our EQ, our channel 50% line. I'm looking for price to draw back, yeah, into a fair value gap, which we have here. As we see, price comes up, breaks back down into the fair value gap here, right? We can look for entries in here with our stops below here. And or if we were waiting for confirmation on lower time frames, yeah, that's where we would be looking for those same market structure breaks, right? So to just draw the pattern out for you guys so you see it clearly, if we've got a key level like we've got here, yeah, and we're saying to ourselves that we're looking for price to dip down below that, then what we want to see is we want to see price come in, sweep the lows, yeah, take the liquidity from the lows, break back above, so we've got that impulsive move, yeah, that takes out this high. Then when price corrects back down to here, that's when we look for our entries, right? So market structure break, telling us price is willing to go higher, and then we look for a fair value gap in here, and then we would drill into our lower time frames to find an entry here. You can get front run on these setups, of course you can. It happened to us quite a lot over the last couple of weeks, but you just don't take those entries. You just wait. Trading is so much about patience, guys. All right. Now, there's some other really amazing exponents of techniques like this, like SMFX, who's a guy I was introduced to recently who uses a lot of double confirmation work, which is a way of being a little bit extra safe on this, right? And his principles are that you're waiting for this first move, the first run of the lows, then the break above the high, yeah? And then you're looking for the next one, right? So in which case, you would be trading this. You'd be looking for these lows, which we can see are taken here. Yeah, I'm going to keep this a little bit thicker so we can differentiate them. Then we're looking for the high that sweeps the low. Yeah, price breaks above this, and then that's where we're looking for our entries. All right, so we don't need to overcomplicate things, guys. All right, so what we're looking for is something similar up here. So if we're saying to ourselves, well, if we believe the ultimate target is here for price, yeah, and that's the inside bar, that thinner one, and this is the mother bar. So let's put it in the middle and say to ourselves, let's be conservative. Let's give ourselves some low-hanging fruit, if you like, in terms of targets, which again is an ICT term, although it is a very British term that I've been using well before I knew who ICT was, but I do like it as a term. Then let's remember the same principles. So what are we looking for? We've got our fair value gap here. We can even refine this down as we go on to the 15-minute, right? And that's this inefficiency here, right? Look at that move as price has just gone higher. It's just left that, right? Huge imbalance between buyers and sellers. So the market often likes to rebalance, yeah? So what I'd like to see is price kind of break down into this area here. Yeah, something like this. Then I'd want to see a reaction where we get above that. And then that's where I'd be looking to take my entries, okay? So price to come back down into here because this will trigger people to start going short. The shorts will start leaving their stop losses above these highs, right, as they go down. That way, then when we break below that low, we sweep the low, break above the high that took the low, take out all liquidity below there, and then we start knocking off these stop losses as we go up. And what's that doing? Generating more liquidity to fuel a move higher to our ultimate goal, which is up here. Okay? So does that make sense, everyone? Hang on, let me just pop back to the comments. Like I say, rolling this off of a laptop at the moment. So let me just take a look what we've got on here. So let's have a look. I said, brother, why did you choose Dubai? I don't know if that's aimed at me or not. I did not choose Dubai. I'm not Dubai based. I'm based in the UK, which is an even weirder decision if you ask me. But I'm born and bred here, lots of family here. Not going to make it a political one. There's lots of things that I disagree with in in terms of the politics of this country, but most countries are the same. But I was not. I've not been to Dubai actually. Something I really, really want to do. Joshua, thank you. Thanks a lot, buddy. Really appreciate that. Okay, so Cybercath DPPR. Apologies if I pronounced that horrifically. Hi, I want to offer promotion of your channel to viewers, followers, views, and chatbots. The price is lower than any competitor. The quality is guaranteed the best auto. Incredibly blah, blah, blah. Go to Doge Hype. Here we go. So I think that's coming from Twitch, probably a bot. Do be very careful, guys, if you see these bits and pieces come up in the comments. I can't speak for the person entirely, but they're often scammers or people that are coming on. So make sure that you get confirmation, all right? And also make sure you're trading with reputable people. Do your homework, right? Get on there, take a look, check testimonials, speak to community members, take up free trials, bits and pieces like that, or reach out to people like myself or other people that work for other communities as well. Like, of course, I want you to come and join the nest. It's my family. I know what we do there and I can vouch for it, but there's other really great trading communities out there as well. So yeah, just make sure you, like with anything, guys, you're doing your own research, all right? So C-Ron, hey buddy, saw you around loads across Congress. Absolutely fantastic to have you with us. Hope you're learning loads. Don't hesitate to ask questions. And Slick 30, nice. I remember being slick and 30 as well. I probably wasn't that slick actually, but I was 30 once. Thanks for the free wisdom. You're very welcome, buddy. Here every Wednesday, streaming for you guys. Again, if you've got any questions, bits and pieces, please do let me know. Now, I'm keeping this a short one today because, like I say, I'm on holiday, but I couldn't miss coming live for you guys. I did want to do a quick market review. So to finish up, does anybody have a chart that they would like me to take a look at? We can do a top-down naked chart. I'll walk you through my thought process on it, do a 5-minute quick top-down, and we'll see if we've got any interest. We can obviously look at Forex, we can look at traditional markets as well, and obviously crypto. Quick question while you're chewing that over, guys. RB Sniper 22. Thanks for the great content. One question. How do you choose the mother bar? Seems like you took 14th of November. I would have thought 10th of November. And when do you take a new mother bar? That is a fantastic question. So it's one that's a little bit up for interpretation. I'm just going to pop back to the charts and I'm going to leave RB Sniper 22's comment on there. And yeah, let's absolutely dive into that. So one of the really important things with trading is there's different ways to interpret things, and the key for me is that you're consistent. Okay, and obviously the key for myself is that I'm consistent. Also, always leave that bloody thing on. Right, there we go. So here we can see, as RB Sniper 22 is pointing out absolutely right, if we just hide, let's select all of this quickly. Go to our object tree. This is something you can do, guys, as well. Not teaching you how to suck eggs. If that makes any sense to you at all, it's a British statement. But it just means not trying to tell you to do something you might already know how to do. But if there's new people here on the stream, it can be quite handy. You can hold your command button, and that gives you your nice drag that you can use to select lots of bits and pieces. If you want to hide them, you can, or do anything with them, put them in a group. Just double click or right click on that, and then create group of drawings. And then I'll put on there, I'll just put, let's say, setup 1. I can do that. I can lock it so they don't move, and then I can get rid of everything. So we got a nice clean chart. All right, nice little trading view hack. And I don't know if their offers are still going on at the moment, but anyone using trading view, I know they've had their Black Friday sale. So I hope Black Friday sale. So I hope you made the most of it. Really struggling to speak today. So this is the point here that RB Sniper 22 is pointing out, right? Is that we've got this mother bar, which is followed by this inside bar, which we can see we ran the inside bar there. And we've now got this. So for me, I'm still very much aware of these levels, right? So it's not that I'm kind of discounting them. This, I know these two have been run now, right? So for me, these two now are irrelevant. What becomes relevant is our sell side liquidity, which is here. Right? So this is our sell side liquidity, or just think of it as liquidity, right? So if we're going to break down, I'm looking at that. I'd also be looking at this as a key swing low, yeah? So on a daily scale, that wick's higher than that, and that wick's higher than that, making that an interim swing. So I'd be looking at that for liquidity as well. Now, what RB Sniper's referring to here is why I'm picking this mother bar here, because we also have others, yeah? Again, we've got this mother bar. But once again, we can see that this was run down here. And again, you can see the effectiveness of these patterns, guys, right? That mother bar is made valid when this candle closes. These lows get run, yeah? Price reacts, closes back in the range, trades higher. Where does it trade to? Just above our 50 line, yeah? So there was a good clean trade there into the channel EQ. So we discount that one again. And obviously the inside bar has been run as well. If we look at the inside bar high here, you see that got run, came back down, ran the inside bar lows, and then rejected. So again, we're just looking at these points. And what you'll find is when we're in these choppy kind of ranges, price does bounce about, from the highs to the lows, as it's just seeking liquidity, getting people chopped up, punishing people that are late shorters or late longers, all right? And then obviously here's the one we're discussing, which is the high here. The low obviously got run down here. Yeah, so we discount that now. And then we have the inside bar here. So that's how I would look at it. These, for me, are all kind of levels of liquidity that I'm monitoring on lower time frames to see how they interact. So it's not that I'm kind of favouring one over another or discounting one over another. What I want to see is when price goes in and when we get these patterns. If we've got key liquidity above, then I'm interested. Obviously, when we look at the sell side liquidity here, we've got another inside bar on the daily. Also as well, guys, to give it some context, inside bar patterns form when there's a little bit of indecision in the market. So we shorted this, right? This was a short. We shared this with the group. This one works out really nice. Once again, really simple, guys. Came up. Hang on, make sure that's spot on. Yeah, so same principles. Ran the highs. Let me zoom in so you can just see that. took out the highs, expecting a corrective move into where? Well, for me, it made lots of sense that we would come in to try and find liquidity here in this order block, which we did. So this is, oh, click the wrong one there. So this is where we expect liquidity, right? This is the down candle before price moves up. And now for me, this becomes valid here when we break above it. So when this is swept, validates this order block, right? Because we've broken above the high of the candle. Price pulls back into this area. That's why we were looking for longs here. So we were short here into here, stopped out on one setup, which was a 1 hour loss, got 1.9, I think, on the next one, 1.7 on the second short into here. And then we've taken some longs up into this position up here as well. But again, all we're doing is we're just playing this story out, right? So I know where my liquidity levels are. I just want to see how price reacts when it gets there. So RB Sniper, I hope, my friend, that answers your question and that wasn't too rambly for you. If it was, please do tell me, because I do have a habit of waffling on. Slick 30, FTM chart, FTHAO chart, .NET, Cosmos and Mina. Happy holidays. Hey, thank you, buddy. Happy holidays. Polygon Matic, please. Good afternoon. H, you legend. How you doing? Waxar as well. Guys, great to see you on here. Great to see you. Sorry, I'm currently on a little vacation, which starts a little bit later on, and I'm just got a light set up with me. I'm flicking between the charts today. Just a quick question at the bottom. What do you think about Hook crypto project, which launches on Binance soon? Should we buy it? I have no idea, my friend, unfortunately, but I can tell you who will certainly be a fountain of knowledge on it, will be Julian. Yeah, our wonderful, one of our two amazing fundamental analysts. Now, please do check this, but I think that's Julian's. King Julian am I. Yeah. And then we've also got Milky Gem Hunter, who's another absolute legend. These guys on the fundamental analysis side, if you've got any questions or you've got any interest, do come along. Come and check us out at the Nest. You get full access to these guys, like myself, every single day. But they've also got Twitter and bits and pieces. So please do interact with them. It was great and clear. Thank you. You're very welcome. Very welcome, mate. Burns, there he is. Hello, mate. Have to rewatch the first part. Yeah, no worries, buddy. If you've got any questions, you can always ping me a message. But yeah, it will be available to watch as well on recording. So, oh, God, guys. Right. Okay. I'm really sorry to do this. I'm just going to have to pick two charts, really, and then do 5 minutes on each. So, have we got any crossover between the charts? Why don't we go for FTM and Matic? Yeah? Let's do really quick top downs on both. Apologies if I missed any, guys. I'm going to make a longer session next week, so do pop back on if you can. And yeah, we'll absolutely smash it. I'll get a load more charts covered for you guys. Going to start doing regular chart reviews as well. So let's have a look where we are here. So again, you can see, just before I get rid of these, guys, you can see similar kind of setups here, right? Looking for key liquidity, waiting to see how price reacts. We get it, we come back within. What do? Set here, pull back in. When we get back within this range, this low here, we come back within with this candle, then we get a good opportunity to trade it up into where we believe the liquidity is sat, in which case is here in this order block. Yeah. Price breaks down, comes back into this. We get a nice trade from here to here. Okay. So we can see on here how we're looking at liquidity. And this here actually is really interesting. So don't just get interested on the winners, guys. Make sure you're really, really paying attention to ones that don't go. Right, so here we can see we've got our daily mother bar. Just get rid of this. Mother bar, inside bar. What happens? Price runs the lows, yeah? Comes back in, opens, fails here, and has this absolutely huge sell-off, right? So in here, we might have got stops out, or we might not have got our trigger, right? Because we might not have had that pattern like we're talking about where we see the lows taken, lows swept, sorry, and then closing above the high. However, if we're wrong on these, no problem. Look at how many we've reviewed today, guys. How many of those have been right? As long as you've got a good, 1.5, 2R average trade return, and you're willing to hold those trades, not cash out them too early, then, you can afford, well, some trade setups, you can go down to sort of 30% win rate, right? As long as your R's there, you're going to be a profitable trader. So don't concern yourself with trying to be right all the time. It's not going to happen. You just want to find consistency, okay? So let's hide all this and let's just do it from scratch, yeah? Again, just highlighting all that using the command button, dragging across, and then I'm going to go on to here, create a group, call this one current setup, lock it, hide it, naked chart. So, quick top down, right? It's not a naked chart at all, is it? Look how much crap's back there. But actually, this was a session I was teaching a little while ago, right, guys, which was really, really interesting. So looking at liquidity, again, these lows, swept, close within, trade higher, right? These lows here, when we broke down below them, we never revisited back above, right? Showing us that price was looking for liquidity lower. Up here, we can see these key highs we were looking. Price came in, swept the liquidity higher, drew back here, right? Actually, I think right into the top of this. Then we pumped higher. We took this liquidity but failed to get that reaction. Swept the liquidity at the highs, took out these lows. Now, you see here as we broke down with this big impulsive move, how price came back to retest this area here before it then sold off. All right. So it's all, for me anyway, it's just all about liquidity and seeing how the market moves. And then the bits that are on here, we can see we've got liquidity below here. These equal highs here, or relative equal highs. Yeah, maybe probably a little bit adventurous with those, but we can see here price came in, swept these before we had this corrective move. All right. The other thing I'd like to say, guys, quickly is don't forget about your candlesticks. Yeah. Now, we had an amazing show that I was very lucky to host during Congress with Muro. What an absolute dude, by the way. Follow Muro. I mean, the guy is just unreal. Lovely guy, very humble, incredible trader. And him and I, in common, have this thing, you know, we like simplicity in charts. We're looking for certain bits and pieces. And on the higher time frames, don't forget to look for your candles, right? So, bearish engulfing candle, price corrects. Bullish engulfing candle, price goes up. Bullish engulfing candle, price goes up, right? Bearish engulfing candle, price going down. Bearish engulfing, price going down. Bullish engulfing, price going up. Bearish engulfing, price going down. Bullish engulfing, price going up. What do we have here? Bearish engulfing, price going down. Now, obviously, you need to dive in to the lower time frames, right, to find those setups. I know I'm making that sound more simple than it really is, but they're definitely things you want to consider. If we just look at this little patch here and say to ourselves, okay, how often when we get a bullish engulfing candle do we see a pump? This is on a daily now, right? And when we see a bearish engulfing candle, after that, do we get a dump? And can we pick clear targets? Yeah. So, like we said, let's start here. No cherry picking. Let's pick every single one. So let me just check the comments quickly, just in case anyone needs to know about the no, all good. Emblaze, my man. Do you see liquidity sweep above the current top? Oh, good question. Remind me of that at the end, and we'll take a quick look. And Stephen, sound, love that term. May even be British with a solid name like that, and using terms like sound as a pound. Jedi Cole, yes, he absolutely fucking did because he's a legend. Muro caught last night's run up, was nice. 4R, he said. I don't doubt that guy at all. What a total dude. Go and give him a follow and tell him that BC says hi. So, just to go back to this quickly, remember, a bearish engulfing candle or any engulfing candle is a candle that completely engulfs, and I allow for the body, not interested in the wicks. Body completely engulfs the prior body. That means it has to open level or slightly above it. You see it slightly above more in traditional markets. So level, and then see the body completely gobbles up the prior. And then a bullish one's the opposite. The body completely gobbles up the prior body, right? So it has to be a bullish candle eating a bearish candle or a bearish candle eating a bullish candle. So let's take a look at it. Actually, let's start with this one. Bullish engulfing here. Failed, right? But why wouldn't we have taken that trade? Because we're clearly sweeping liquidity here, right? So again, all comes down to confluence. Now, when we get this bearish engulfing candle, yeah, let's just mark that up so you know that's there. When that closes, which means it's the open of this candle, which remember is here, why would we take that bearish engulfing candle? Because we've got a clear target below, right? This finishes here. We're looking for price to open. And obviously, again, we'd monitor this on the lower timers. And in fact, look, let me replay this. And I'm actually going to run through this with you guys because I think this is such a key point. Now, when this closes, this is when we're getting interested. Do we just jump in? Absolutely freaking not, right? Price opens here. what we're looking for, this is our daily open. It's definitely not a daily fair value gap, I'll tell you that. You know why? Because daily opens here. That's this. So remember with candles, guys, when this closes here, trace it across, yeah? And then what you're saying to yourself is, okay, well, what's the story here? What do we want to see? We want to see the daily open. We want to see price up here, yeah? We want to be looking for short setups in here, right? That's price coming up, breaking down, and then we want to be looking to sell it. Why? Because we've got a bearish bias here. We've had our bearish engulfing candle. We've got clear downside target here. So we're saying, okay, price is probably going to come for this liquidity before it makes its next decision. So this here, the daily open, is once this candle has closed. So that's where we make an allowance. I then like dropping down to a 15-minute. So here's the principle that we're looking for. The day opens. What do we want to see? We want to see price trading higher. Yeah. Then we want to see exactly as we described before. We want to see a liquidity sweep of the highs, which we get here. We want to see the low that sweeps the high taken. We can enter on this line, which I call a breaker line. These things aren't particularly unique to me, it's just what I call it, all right? Price breaks down, retests that here. Yeah, so you see this? Excuse me. Price comes down, retests that here, and then we sell off. So this gives us a setup here. Price comes down. Where do we target? Now remember, we've gone on to the lower time frames. We've got a higher time frame target, yeah, which is all the way down here. But it doesn't mean we're going to just drop there in one go. We want to be taking trades with the confluence of the higher time frame, but closing them out. So first thing I'm going to make note of is I'm saying, okay, where's my prior day low? See here? See this session break line? This is the previous day. That's the low of the previous day. That's my first target. Oh, that didn't work out too well, did it? Let's do that again. So, price breaks down. Excuse me. Runs the high, breaks below the low. Yeah? Price then comes back, retests this area here. And now, if we're not going to drop onto the micro time frames or the much lower time frames and refine this entry, no problem, because this gives you more time. You've got a clear entry method. You've seen price trade above the daily open. You're watching for your breakdown. You've got a clear downside target here, and you've got a high time frame ultimate downside target over here. But you want to book profit. No point just leaving the trade run out. Book profit. Wait for price to do the same thing again, and then re-enter again as long as your high time frame bias hasn't changed, right? Because it hasn't. We haven't run those lows yet, right? So, trade here, short position, even if we're just entering here, stops above the high, clear downside target here, nice 2.1R trade, all right? We hold that out, we take profit, probably around about 80%, 70 or 80% here, flip our stop loss to entry. What happens? Price comes back up. Again, look, see this beautiful sweep of the lows, yeah? Price comes back up, takes out these highs, pulls back down, yeah, into this area, and then pumps back up. So, no problem. Got a good day's trading in there, yeah? Really, really good day's trading. For me, personally, with my strategy, it's important that it happens within the London session and New York, all right? So for me, that's here, 8:30 in the morning, and this, what we actually triggered here, 9:45, okay? So, then what happens is we allow the day to close out, right? I'm not trading this. This is like past midnight for me. We're going into Asia over here. So I'm not going to trade this breakdown, although if I had done, would have been a nice trade. We didn't quite take out the sell side liquidity, but you would have had more than enough R to get a good trade in here. However, remember what I was saying, our bias remains the same. So what are we looking for? Yeah. So the following day, which is this day here, we want to mark our daily open. Just do this so we're consistent. Right. Sorry, I have to get this right or it'll absolutely play havoc with my OCD. So, once again, what did we say? Remember the same bias we had here when our daily open was down here. We want to see price draw back above the daily open. We don't want to jump in down here because this isn't where institutions are going to be selling, right? They don't want to sell here because price could reverse here. Remember what our target was on that one. It was the prior day's low. So where's the prior day's low here? It's here, right? So we don't want to be selling when we're already approaching that, right? Because the chances are that people with more clout than us and people smart money, institutional money, and bits and pieces are going to want to drive this market up here. Why? To take out all the stops above here, not just there. Why don't we take the stops above here, here, and here, right? Naked, naked, naked. Wallop. That takes out all three of them. And then we follow the same principle, right? Price comes up, sweeps the highs. What are we looking for? Here's our liquidity sweep. Yeah. Sweep. We come back above. Now, we've got the low here, right? That technically sweeps this high. So that's far too much for me. Now, if I see that and I'm wanting to get a trade entry, I'm not just going to enter blind, right? I need to find a setup, right? And that for me entails moving to the lower time frames, okay? So I'll first take a look at the 5-minute setup and I'm saying, okay, well, this low's down here. It's still a little bit too adventurous for me. Okay, and then we can see here again, excuse me, that this is our key low. We can't really do anything to change this, guys. We're looking, and we always need to trade, stay true to our methodology. So we've only got one more time frame we can check on, and that is the 1-minute chart. It might not let us do it. No, it's not going to let us do it, is it? So, okay. That's what's important about drilling down through the different time frames, all right? But I think that might have actually just kicked us out altogether. Being a little bit twitchy there, is it? Don't know if that's just actually got rid of everything. Hang on. Here we go. Just get replay mode back on. And we're just going to go back to a 5-minute chart here, guys, right? Now, the question you'd have to ask yourself here is, can you get a setup down here, right? If this is our target, remember, the prior day's low, then we've got a kind of an interim low here. We don't really want to wait for this to kind of break down here, but we have to if we've got no other clear setup, right? So as price comes up here, sweeps liquidity. What we do get, and we can see very clearly, is price then breaks structure by taking out this interim low here, which you can see is tested perfectly over here. Now, for me, that's not my strategy, right? So I'm not entering here. Although you can see it's a good entry, what I'm looking for, right, the liquidity sweeps to the high, closing below the low. So we can see we have another high taken here. Do we close below the low? No, we don't. But we get this high here taken. This is the low that sweeps the high. Again, becomes our breaker line, or for whatever terminology you want to call it, break of structure. That's where we can get our entry, right? And where's our target? Prior day's low. So we take our short position here. Our trade gets triggered here, right? Stops above this high. Right now, I would definitely be watching for price here coming into this low, yeah? Because we've purged this low down here. As it comes back up, tags us into our position, yeah? I'd probably be looking to trim a little bit of profit here on this naked low, right? But my ultimate target, like I said, is going to be down here. And this is where you can get some really nice setups, guys, all right? So you see that. It's not a ridiculous time frame. 5-minute is monitorable. You get a 6-hour trade in there. So, sorry, mate. I really need to learn how to pronounce names. Double R. Hey, hey, hey. Back at you, buddy. Arazetska? Apologies, I'm pronouncing this wrong, mate. No, not short message. What we're doing is we're just looking at some historical data, mate, just showing you how these kind of trade setups would work. So I hope that's been clear in terms of, look, we're using prior day's lows as targets. We're looking for liquidity sweeps to the highs, but all based on high time frame bias, all right? So I'm going to cover this obviously in a bit more detail in different streams. I know this was supposed to be a quicker stream. It never is it? I do love a cheeky waffle, but I just want to make sure that you guys fully understand this, right? That I'm getting this methodology across, because what we were doing here was just looking at these engulfing candles, right? And we're saying trading doesn't have to be overly complex. We got this bearish engulfing candle here. We've got these equal lows here. Once this confirms here, we dive in on the lower time frames, wait for price to pull up above the daily open so we can short it back down to key targets below. So using those principles, using that methodology, what are we looking at here? So we're saying to ourselves, price is kind of range bound here at the moment. Where's our liquidity, right? So if we're looking for the same principles, key highs and lows, right? This is definitely of interest. This is also of interest here. Why? Because that's lower and that's lower, so that makes an interim swing high here. What else do I think the price could be reaching for up here? Well, if we are pumping a little bit higher, do we have any inefficiencies here on a daily scale? No. We see we had this one here that pulled price back up, yeah? So what I'd be looking for here, certainly if I wanted to short Matic, is thinking about price coming into this level here, and then again looking for those breakdowns, right, on the lower time frames, in which case I then want clear targets, of which that would be one, and then that would be one below. So let me go on to our 15-minute very quickly so I can show you how that would look. So we've drawn in, we've got our levels. We also want to be aware of prior days' highs and lows, right? So we had this, which was Tuesday's low, and pop that in there as a target. Now, what else do I like here, or what else might be making me think about going short here before we get to this target? This is definitely a tease because we've got equal highs here, or relative equal highs. That's going to be liquidity. We've also got liquidity sat above here. Now, if we extrapolate this, we can see that we've currently run this, yeah? So if I was looking for a short setup on Matic now on the much lower time frames, there's an expectation from me, and again, I'm not trading this today, guys. I'm on holiday, and we've also got Powell speaking today. But if I wanted to short this right now, I've got my high here, so I've seen we've swept liquidity. Remember, same patterns, right? Swept liquidity above the highs. Breaking down, what have we done? In here is the low that sweeps the high. We've broken down below that. I would have been looking today for short setups into here. Yeah. And again, doing it on the lower time frames for me. You don't have to do it on those lower time frames, guys, just as long as you're being consistent. So what would the trade have been? Like we said, there's the sweep of the high. Price comes up, takes out that high. Where are we getting interested? Well, we break below the low here. What do we want to see? We want to see price pull back into an inefficiency, right? Into our fair value gap. So we've got that here to here, which we draw across to there. There we can look at our entries. First target would be here. Second target would be the fair value gap down there. So if I was looking to be short today, and I am not, so you're aware of that, I'm not looking to be short today. Here is how it would look. Into the fair value gap, sweep of the highs. Yeah, here's the low that sweeps the high, like we said about before, our breaker line, right? So entries here. Stops above the highs. First target into here, 4R. Extended target's going to be down into here, giving us a nice 7.3R trade. The reason I'm hesitant to trade this today, guys, is because we've got Jerome Powell taking the mic. Days like today can be quite unpredictable. Also, I'm on holiday, but that would be the kind of trade setup I'd be looking for on there. Does that make sense, everyone, or anyone that's interested or listening? Marco, more shows like this. Good man, that's it. Keep it pumping. Love the winky smiley face as well. Love a bit of cheekiness. Jedi Cole, this reinforcement is fantastic. BC, thank you. Realising it's rather redundant for you. No, not at all. I'm more than happy. Like I say, the reason I do this, the reason that Burb does it, the reason Jay, all these legends do it, people that run private groups, people that run paid groups especially come under a lot of criticism. And I can understand why a lot of scammers in this space, a lot of people that do it. But realistically, when you're part of something like this, so much time and resource goes into this, guys, from people. Now, we do want to... we give up a lot of time for free for people, right? But putting these groups together, it costs a fortune, the legal aspects of it, putting everything together, keeping the group running, the back end, the dozens of people that are involved in the back end, running everything, running the systems, making sure they're updated, running all the education material, etc. I am a strong believer that paying in something gives you more commitment towards it. The idea of getting information for free is brilliant. And if you're very motivated, you want to piece that stuff together, absolutely. Best of luck to you, and absolutely go for it. But to have the support of a good community, certainly something I wish that I had. And even now I utilise it a lot. I lean on my brothers and sisters at the Nest a lot for their information, right? Because I massively respect them. Massively respect them. Just very quickly on here, if you were trading this, right? This probably gives you a nice little point to trim some profit off of this trade. What are you here? Your 4R at this point. Yeah, so if your 1R is $100, you're 400 up here. I'd be trimming a bit of profit here and probably moving my stops to entry. Because if price does decide to do this, yeah, and starts coming back up and takes out our stop loss because we've moved it to entry, yeah, people are like, oh man, but what if it does this? Yeah, well, don't worry about that, right? As long as it hits your parameters, wait for the liquidity sweep again, price breaks down again, then you know you've got an even higher likelihood that when that takes that out there, that you can trade this down lower. All right. So before I digress too much, what have we got here? H, you legend. There she is. I like you mitigated the entry on the lower time frame. Thanks, mate. Yeah, lower time frames, me guys. Don't get caught up on the lower time frames. Just use the lower time frames to pinpoint your entries. Your bias is always going to be set on the higher time frame, right? And that's going to help you with your consistency on this. BC, do you generally stay out of the markets on big Fed announcement days, considering likely huge volatility? Yeah, absolutely. I do. I know some people that trade it exceptionally well, and some good FA, you can kind of get in and around it. But for me, we too often, especially at the moment with the market being fairly illiquid, we often see these big kind of, Darth Maul candles, this huge swipe of the highs, huge swipe of the lows, liquidity gets taken everywhere, very, very difficult to get in. So one of the biggest lessons I learned in trading is about patience, right? So you want to remain patient, stay out of the market, just make sure you're killing it when you're set up to hitting. Yeah, don't chase stuff. Take some time off, use it to educate yourself, use it to improve. I read a lot, I study a lot, constantly banging onto Burb and picking his brain, as well as, awesome people in our group. Everyone is just such a diverse group. You've got amazing algorithmic and system builders like Pedro. You've got people that are just exceptional at using volume in their trading, like Bast, who's amazing at it, Razoon, who teaches me so much about the use of Fibonacci's, Jay, who just in my opinion is one of the best traders out there, very underrated, Trading Tank, Milky and Julian, who are just sick. And then we've got loads of other really good guys in there as well. We've got QBS, who's an exceptional trader, Jimmy, the psychologist as well. And, I'm not going to ramble on too much, but make sure you're getting your mindset in check for this, right? Because trading can be stressful, and you can make it a lot more stressful than it needs to be. Emblaze, no need to respond to a question about the liquidity sweep. The mother bar resistance you've marked out exactly where I had marked out. So that actually answers my question. Thanks. Awesome. Emblaze is a very, very good friend of the Nest and mine, and is a very, very good student as well. So good work, dude. Keep it up. Thank you very much. Slick30. Legend. I don't know what that box means. I keep getting it on the thing, probably because my Mac doesn't recognize it. But thank you, buddy. Unless it's a middle finger, in which case, apologies. Holiday scenery pics on the chat for us. I don't know if I can actually, can I? I'd tell you what, I'll post. No, I can't actually. I can't post pictures. But what I'll do is, I'm going to post some stuff on. I'm going to post some stuff on Twitter for you lately, especially of my awesome dog. If anyone's interested, you can follow me on that BC_Richfield. I've got a husky that is literally my life. So you can come and check that out. Show you, she's away at the moment with some family and her best mates, having incredible beach fun every day. So I'll post some pics for you for sure. Please share your thought about Powell speaking tonight. A quick one as well from Arazetska. Again, apologies if I'm not. Are you staking your crypto? I do liquidity farming on and time staking on USDT. But that's again something that I don't like talking about that too much. I learn from my Nest fam on that. People like Julian, people like Milky and Jimmy, who's incredibly knowledgeable on that as well. So do make sure to hit them up. Yeah, Bitcoin dumping. Yeah, probably pulling back at the moment. We might, get this corrective move at the moment. Matic is looking to have a little bit of a correction. Expect a bit of volatility today, guys. The markets are a little bit illiquid at the moment, so they can get moved around quite aggressively. Thanks for the stream, BC. You are more than welcome, Bernd. Thank you for always tuning in and for the good questions, guys. So I did say I was going to just look at another one. Might get to see Mag take out that low. Maybe we don't take out the low, but no, I think we do. We probably move down a little bit further. So let's have a quick look at BTC. Here we go. Bitcoin coming down a little bit. I want to be careful. Clearly got a bit of liquidity below these lows, although we're just on such low time frame on this. It's quite hard to get a real kind of key handle on it. But once again, yeah, I think I posted this out this morning on BTC, actually on Twitter. We've got a fair value gap down here that looks pretty tasty to me. It doesn't mean it doesn't get front run, but once again, as long as we know, if price moons from here, then fine. Then we are looking at this area here, right, to go short, and you'd want to see something like this. Okay, remember that. So we've got that. Price comes up. We want to set that high. We want to see the high get swept, which is there. Price break down below the low that sweeps the high. Retest on this area gives us some high probability setups to trade lower. And if we haven't tested this area at that point, then that's where I think that we probably look to come into. All right. But again, all about context, guys. If we start pulling down into this area here and our bias is bullish, then we want to see something more like this, right? In which case, then we'd be looking to take trade setups here and in any kind of fair value gaps that come in that area. All right. So I did say I was going to review one more chart for you guys, and I do want to be a man of my word. So we're going to do that before we close up. Unfortunately, I can't bloody remember which one it was I said that I'd review. So whoever throws the first one at me on here. No, sorry, I do. I absolutely do. Slick, it was you, wasn't it, mate? It was FTM. So, yeah, sorry, guys. I will definitely do it. This is torture. Oh, God, I hope you mean the markets and not me. Trade made 21. So, or maybe he does mean me if he's off. He's off. Torture. See ya. Sorry you don't like it, mate. FTM, here we go. So let's take a quick look. Let's take a quick look. FTM. I don't think Matey Boy liked me rambling on. I do ramble, to be fair. It's something I should definitely work on. Right, here we go. So, I mean, there's no secret, is there, here that we can see this thing is trending down, right? But we've got this nice pump happening at the moment. So remember what we were talking about, yeah? We can see we've taken out some key highs here. And have we taken out these highs here as well? No, but we've taken out these relative equal highs here, yeah? So relative equal highs here on the daily. The reason we look for equal highs, guys, or relative equal highs, they don't have to be perfect, is because we expect there to be liquidity across. Price had tried to get past it once, failed, tried to get past it again, big breakdown, right? Now price has taken that out. Oh, dear God, I keep doing that when I hit spacebar. Hang on. Right, so now we've taken this out. We can see we've come into there, we've swept that, right? Which has caused this correction. Now, what I like about this move here is we've also taken out these lows, right? So price has come up, taken the highs, it's now swept the lows. So that's a really, really good indication. That's a really healthy price move, right? So now we're saying to ourselves, okay, well, what would be luring price higher will be this fair value gap. As we come up into this, there's two areas I'm interested. I'm interested when this gets filled, so the top of this, and outside of that, I'm really, really interested here. Right, so that's our buy side liquidity. you can label it up liquidity or buy side liquidity. I use just through habit, really, ICT terms. I like them as well, buy side, sell side. But you can just label them up as liquidity, just a key target area. What else do we have as confluence? We've obviously got this trend line on the daily. We can see price, resistance, resistance. If it comes and breaks above this, yeah, maybe we see a deviation up to this, trapping people again before it breaks down. But my kind of key area is thinking about this fair value gap fill here. Okay, let me just label that up. Okay, so I'm going to go down onto my 15-minute chart. And I want to scan across to the left here. Actually, let's put this on an hourly. See if we've got anything really of key interest here that might reverse price beforehand. No, this high here, possibly this hourly order block here before price really sells off aggressively. Let's take a look at that. We want to make an allowance for it. So there's a chance that price is seeing kind of like an earlier stage rejection here. I think I would either want to see here, I'd like to see the fair value gap filled. I'd also like to see a liquidity sweep here as well, right? So ideal scenario for me here would be price is kind of coming down into these lows here, price kind of working its way up, taking out that higher, coming back down below the low, swept the higher. Yeah, and if I was looking for shorts, then we've obviously got this 15-minute fair value gap here. Like, again, I know a lot of the charts look similar, guys, and that's the kind of nature a little bit with crypto. But we make this grey again, and we say to ourselves, okay, if that's what we're coming back down into on the lower time frames, well, then we've got a nice clean target here if it comes into here. And then we also look below here where we clearly have some liquidity as well. Stopped. Bit of liquidity here. Inefficiency down here on the 15-minute as well. Maybe we get a deeper correction, but if we get a good entry in here, I would be saying that if we break down in this kind of pattern, then I think we see lower prices. All right, guys. So I hope that's been interesting. There's a lot of alpha in the rambles, BC. So ramble on, mate. Thank you very, very much, mate. Really do appreciate that, Jedi. It was really good fun hanging with you and having you part of Congress as it was with everyone. Guys, I hope you've got good value out of this. I've managed to turn what was ideally going to be a 20-minute stream into an hour and 10, but I hope it's been valuable for you guys. Love being here with you. Really love all your feedback. Even Trade Made 21. This is torture, and see you. It's not for everyone, mate. I appreciate that. I'm sure you're not even here to tell it, but I do like showing the good and the bad. And always looking for ways to improve. So if you think there are, guys, do hit me up. Let me know. Always looking to improve for you guys. Do come over. Please do come and check out the Nest. You can get free trials. There's bits and pieces coming. Come and have a chat with the members. Follow the people on Twitter. And like I say, my streams are always here. So I'm on twice a week, Monday, which is exclusive for the Nest Club, and then Wednesday, which is for everyone. So do a few live streams. I'm going to start doing some market reviews as well for you guys. So do a couple of other shorter sessions, hopefully, where I can go in there and just do some quick market reviews. But come and hit me up on Twitter. Come and find me down at the Nest. It's always a real pleasure being there with you guys. I wish you all a fantastic week, and I look forward to catching you around Twitter and catching you around the Nest. Take care.